some shares in a flash, high hopes in a mighty dash. Stock ticks and it starts to crash, while it's thinner than a broken glass. Market moves got me feeling wild, swinging harder than a rocket child. Picking up buys like a trader around, praying profits ain't reviled. Charts like a puzzle complex, trading daily, keeping us perplexed. Riding waves like future specs. Gotta calm down, no pretext. Market moves got me feeling wild, swinging harder than a rocket child. Picking up buys like a trader around, praying profits ain't reviled. Highs and lows, gotta keep my cool. Can't let fear or greed overrule. Every pick like a precious jewel. No big fool, we ain't in school. Oh, market moves got me feeling wild. Bought some shares in a flash, high hopes in a mighty dash. Stock ticks and it starts to crash, while it's thinner than a broken glass. Market moves got me feeling wild, swinging harder than a rocket child.
Boris Schlossberg, Managing Director at BK Asset Management. And
BK Asset Management's Kathy Lean.
Hey guys, how are you? How are you? How are you? Good morning, good morning, good morning. Everybody give me a sound check. Let me know if you guys hear me okay, if everything is good on the screen. You guys are seeing the screen. I have a lot of really, really cool stuff to share with you today. Hopefully you will like it. Good morning, Cheryl. Good. Good to see everybody. Hi guys, hi guys, hi guys. Espresso on the go. We are opening up. What time is it? 9? Yes, we're like literally opening up at 9:30. I have so much cool stuff to share with you today. I was hoping I could actually. I think I'm gonna. I think I'll be able to share a tab with you. Let's just watch the price action for a couple of minutes, see how it goes, and I'll get into what I've been doing, which I think you guys are gonna really like a lot because I've been really refining the risk entries to kind of just get very consistent with our trading structure. Just watching the markets here for the first couple of minutes. Nasdaq selling off. Gold is a little bit negative here. I'm actually going to move gold over here. One of the things I'm going to do with you guys, I decided, is we're only going to trade Nasdaq and gold, and I have a really good reason for that. I'll explain in just a second. Let me actually, you know what? While the market opens up, let me share this with you because I really wanted to. Let me just make sure I got this right. Yeah, this one. I want to share this with you guys. Let me do stop share, present, share screen, Chrome tab. This one? No, this one. Yeah, this one. Okay, let's play this. Let's see if you guys can hear it.
Phil Simms is on the show. So I'm doing Inside the NFL. Phil Simms is on the show, and Lawrence Taylor is coming in. So it's Phil, Chris Collinsworth, Lawrence Taylor, and me. I mean, one of those classic, like, what in the hell am I doing here, right? So Lawrence hasn't showed up yet. So Phil tells me a story. I go, I can't believe Lawrence Taylor's going to be here. I mean, that guy, like, he literally changed the game. And I was just going on and on about him. He goes, you know what's funny about that guy? He goes, he didn't even know the names of the teams in the leagues. I go, get the out of here. He goes, yeah, one time we won some game. They were on the road and they're on the team playing. They're all hyped. Lawrence is psyched. And Phil goes, yeah, hey, man, if the Redskins lose, then we're going to be in first place in our division. And Lawrence goes, who's in our division? And Phil goes, you don't know who's in our division? And he goes, man, I don't give a shit. And I'm thinking, like, that is the genius of him. Let's say, I don't need extra information in my head. You have a different uniform than me. I'm going to ruin your day. I thought it was a hilarious story. But as always, you think maybe he put a little mustard on it or whatever. 10 minutes later, Lawrence Taylor comes walking in. Lawrence sits down and he starts telling stories. And in the middle of one story, he goes, we were down in New Orleans and we were playing the, Phil, what's the name of that team in New Orleans? And he goes, the Saints. He goes, we playing the Saints. It was
So this has nothing to do seemingly with trading, and yet I think it has everything to do with trading at this point. Let me go back to sharing my screen here, and I'll explain to you what I mean. Oops, sorry. What happened? Present, share screen. I want to go. Sorry, guys, just bear with me a sec. So I want to go back to my screen. So let me explain to you why I absolutely love this story, and maybe. Did you guys get a chance to hear it? Did you hear Bill Burr? Was it legible to everybody? Let me know if you guys heard it. If not, I'll summarize what he talked about. Yes? Did you guys hear it? Give me a yes in the room, please. Yes, you heard it. Okay. So the reason why I love that story is because I know it seemingly doesn't have anything to do with trading, but it literally has everything to do with what we're doing. I thought it was really interesting. I mean, for those of you, most of you Europeans who are watching have no idea who Lawrence Taylor was. He was a very, very, very famous American football player, almost reinvented the game. One of the greatest football players alive. The point being is that he focused on one thing and one thing only, which was killing quarterbacks, which is what the function of American defense and American football is. And I thought that was really interesting that he basically deleted any information that was unnecessary to the task at hand. And I thought that was a very, very, very valuable lesson to us as scalpers. Because remember, as scalpers, we don't pontificate about the market. We don't have a view on the market. We don't have a view on economic data. We don't care how we only care about economic data in two factors. One, that we need to be mindful of event risk on the calendar. And two, we need to understand how the market will react to the data, not what we think the data is. We may think the data is good, but the market is dumping product. Our job is to follow that trend. So our job is to isolate those points during the day when we have the greatest probability of continuity, meaning that our entry is going to continue in the direction we take it for a quick and certain profit. And that is all we do. We do this over and over and over again, and that's how quickly we generate cash flow. Oh, damn it! Sorry, as I'm yapping, I'm missing signals, but that's okay. I mean, I just I wanted to. So we have a signal here in Nasdaq, which I'm going to take if I get a chance. Okay, let's see. It's going to be a good example of what I'm talking about. This is not like it's not a green signal. It's a black signal. So it's not, it's not great. It means I'm betting on the fact that it's a V. But here's what I want to sort of, explain to you. One of the things I realized, let's see if we can just make a little money here. Come on. All right. All right, fuck it. I wanted to take 100, but we took 55. I was late on this trade anyways, because I wanted to be on this trade. Whatever. It's fine. This is a good example, actually, of what I'm talking about, which is we're going to take every viable signal. And viable signals to me, especially during North America, is we'll take the blacks, we'll take the greens. They work, great. They don't work, we come back on a second entry. We come back on a third entry, right? We just simply make it work by coming back only when we get the signal again. And if we can stay to that signal, and if you want to be super disciplined about it, you could take only the green ones or only the red ones. You could say I'm going to ignore the black ones. I'm taking the black ones because, especially during North America, because I realized that if I don't, if I miss on the first black one, I will TP on the second one, especially if I have very, very modest targets, So the idea is that we just focus on the continuity signals, and furthermore, we only focus. And by the way, look at this. We have a flip now. We only focus on two instruments. I was trading the S&P, and I realized that it was just distracting. If you're going to trade stocks, Nasdaq is as good a directional signal as possible, and gold is a non-correlated asset to that. So there's different directions in gold than there is in Nasdaq. By the way, gold is one of those assets that I found where the black signals are just as viable as the red ones, right? Just as viable as the red ones. Okay, so the key thing here is for us to be, and I'm just watching gold over here because I think we're going to get a sell signal here. All right, sell. Oh, what happened here? Am I one? Oh no, I'm one. Oh wow, that was a big retrace on the entry. Okay, fine. This is the sell. This is the target. It works. It works. It doesn't work. I'll take the next one. Okay, I'll double up on the next one and resolve it that way. The key thing you need to understand when we're scalping, especially when we're scalping our way, is we're getting a signal. If you're looking only at the reds and the greens, probably a signal every 15 minutes. If you're looking at reds and blacks, it's every 10 minutes. So that means there is, within an hour, at least three or four signals continuously. And your job is not to worry about this particular trade losing, the other trade winning. The job is to take the signals as they come, resolve them the best you can, and move on. Now, not even look at the P&L until the end of the day. And it's amazing. You'll see, like, I was trading very, very casually from around 6 o'clock in the morning. And it was very, very quick, couple $100 right then and there. Because remember, every signal you resolve is going to be between 50 and $100. And if you're resolving 5 or 6 of them in a matter of a couple of hours, it's very, very quickly that the money adds up. And more importantly, all of this adds up with a very controlled sense of risk. Most of the time, you are trading ones or twos. You're not trading large numbers, and you're not really plowing into a position continuously at large size. So everything. And here I go. I'm just going to resolve this. So why did I resolve this? Because I didn't like the way it was trading before. Now it's probably going to go down my way. It's fine. Whether I make 50 or I could have made 100 on this, it's really immaterial, because there'll be a next trade in 10 minutes. There'll be a next trade in 10 minutes next trade. The whole idea is to make 100 every 10 minutes, which gives you a very reasonable run rate of 1,000 a day. Now, because obviously you're not going to make 100 every 10 minutes continuously, you can be losing money too. So net, when things shake out and you've done 20, 30 trades like this, you net up 1,000 with very minimal control risk. And you're well on your way, to getting funded. I mean, this kind of approach can really work almost with a $50,000 account, which could get you to funding in 4 or 5 days. I'm using this with a $150,000 account, probably looking at around 10 days to funding on this, on this approach. So that's like the first thing I wanted to share with you, was just this whole idea. Was it 1 to 5 negative? Is that what you were looking at? M33? Maybe in this particular case it was. I could give a shit, because I'm going to be doing 40 of them today. So some of them might be a little bit negative. That, as I said to you, the key thing, the most important thing that we realized that made all the difference in the world is every trade is different. Every trade is different. There are no rules. There are only guidelines. The most important guideline is you put a stop, right? The most important guideline is you put a stop, and you put a stop at the technical point, right? But whether you make a 1 to 5 on one trade, and then the other trade you're going to make 1 to 1 on the other, generally my guideline is I want to make 60% of my target, because the way I'm trading is if I lose, I double up on the next position, and 60% of target not only washes away my losses, but gives me profits, right? So if all these red signals are 66% accurate, meaning that 2 out of 3 of these signals are going to go to target, and I'm lose 1, win 2 type of a structure, I'm well positive on my way. But those are just general mathematics. I think this is probably the single greatest, most important point you need to understand. Risk is finite. Reward is completely and totally subjective to the moment, right? Now, yes, obviously, you want the reward to be as much as possible. But the flip side of that is, if you are pressing for a full reward, you're probably going to have, much lower win rate. The key idea here is not so much to lay down perfect entries. The key idea here is to lay down a lot of these within your guidelines and P&L yourself continuously throughout the day, right? That's the key idea. The key idea is to just simply accrete P&L all day long. And not every donut is going to come out perfect, but they're all delicious and edible if you make them. So I think that's really the most important thing. And so this brings me up to the other point that I wanted to talk to you about, which I think is fascinating, is this book by Chris Voss, which I highly recommend, Never Split the Difference. Also has nothing to do with trading, and yet everything to do with trading. This is probably one of the most influential books I've read. I just started reading it, and it's, I started using some of his tricks, and I'm just shocked at how powerful it is. So Chris Voss was FBI's #1 negotiator, and he negotiated bank robberies, terrorists, all sorts of very high stress situations. Basically makes this argument, which I think is really legitimate, that everything in life is a negotiation. But even if you don't believe that everything in life is a negotiation, I will tell you that everything in the market, by its very definition, is a negotiation. All price is a negotiation. All trade flow is a negotiation. All chart reading is a negotiation. All of this is a negotiation between what you think is going to happen and what is happening, right? It is always a negotiation, right? And one of these, shit, I'm sorry, guys, and I'm yapping, and I'm missing signals in NAS. All right, fine. So the other thing I was going to say, this is sort of the most important takeaway from Chris Voss. Chris Voss says the most important thing in life is not to be right, but to be in the right mindset or in the right mind frame. And that is such an interesting idea. Such an interesting idea when you trade. Because once I sort of realized, that is really the essence, I could give a flying fuck how many times I got stopped out today. I think I got stopped out like maybe 5 or 6 times this morning, and I'm still up. I don't know. Let me just take a look at look at my trades today. I haven't even bothered because it was so liberating to kind of think this way. That it's got nothing to do with being right and everything to do with wow, I only got stepped out twice. I'm surprised. Huh. Yeah. Okay, so let me show you this. I'll just show this to you so you guys can sort of see it. Just me putzing around. I got stepped out. I thought I got stepped out more actually, but that's precisely the point, that I just did not give a shit about getting stepped out on the P&L. And I'm up 319. Very, very casual trading, like really, and I could have been up about 500, and I just, I walked away. There was a lot of things I wasn't paying attention. I missed a couple of trades with you guys right now. It doesn't fucking matter. This is like completely stress-free trading for a couple of hours. Extrapolate that to a full day. It's $1,000 easy peasy. That's what I'm trying to show you. That's what I'm trying to tell you, that having that approach, having that mindset. Oh, fuck. No, I can't get, just 1 second, guys. Sorry. My camera is in the way, so I have to just move stuff around. Okay. I keep missing signals because I'm talking, but I think it's much more important. There's 1,000 signals. There's 1,000 signals. And these two ideas are just so important. The two ideas being primary, that your whole job is to focus on doing signals, not interpreting fucking charts, not saying, oh, today I think this is overbought or oversold. Is this a signal? It's not a signal. Don't fucking take it. It's as simple as that. Be the Lawrence Taylor of trading. Your job is to kill the trade, not to try to change the game in the middle of the price action. So I should have been short. This was an easy short here, right? Easy short here for a second trade. This was an easy long over here for for a trade. All of these things are going to show up again and again. In the next 10 minutes, there'll be more trades. The other thing is to really to have that mindset of like, it's not your job to be right. It's to be in the right mindset. Being in the right mindset means you're only going to take the continuity signals when they pop up. Ideally, you want to take them during the North American hours when you have the greatest liquidity and the greatest flow. And that's it. And just keep it super, super simple. You do that, you have an incredibly high chance of making 1,000 a day very, very cleanly. All right, there's a lot of comments here. Let me see what everybody's saying. Okay. That's great. I'm probably going to take that master class, but the book is amazing. I really recommend the book. I'm listening to it on Audible. It's really, really good. Yes, I'm going to give the indicators in just 1 second. Yeah, Sweetwater is absolutely right. It's really, really important. We are on, we're on 17.1. I haven't changed anything, Tony. No updates, Tony. No updates. Back to, keeping myself, focused on just doing the business. By the way, gold goes to super trend territory. Gold is starting to sell off. Pretty interesting. It's interesting. Gold was very heavy this morning, all morning long, and you could see it's it's starting to buckle. So there's like a couple of good trades. We just missed a few good trades in gold, but we'll pick them up. We'll get them. So any questions on any of this stuff? Anybody want to? Especially Dr. D, you really had to just where's Dr. D? That really hurts, my friend. I was raised in Washington D.C. area. I'm Joe Theismann. What's his name? Oh my God! Now I'm losing my mind. Oh my God! Who was the great running back? Oh my God! Shit! I totally forgot. Okay, it's been so long. I haven't watched. I watched a football game. Oh my God, who was the great big running back for the Redskins during Theismann's time? Oh my God, I totally forgot. Anyways, that was brutal and uncalled for. Okay, yeah, Tony's asking a good question. He's saying, "Can you?" Thank you, Caleb. Thank you. Tony's asking a good question. So let's go through the colors. They're actually super simple now. So there's really two types of colors as far as triangles go. The red triangles are basically signaling to you that it's a sell signal with a negative slope. Negative slope meaning that the last three candles were negative in their direction, in their formation, right? So the slope of the last three candles, it's a very, very sensitive signal. And by the way, if you want to see all of this data, all you have to go into settings and say show dashboard. I don't have the jet dashboard on because I didn't want it distracting on the thing. But the dashboard tells you everything that's visually shown on the chart. So let's take a look at this. First of all, if you're looking at gold, telling you the super trend is on, meaning that prices have really, the short-term and long-term moving average have separated by 1/3%. As a matter of fact, 40 basis points, 40% of 1%. That 10-day range is about 122 basis points. That the average true range here in gold is about $2. And now we have, by the way, a reversal signal, right? This is a reversal signal telling you that this is a reason, meaning that there was a great sell-off, and now we have a reasonable reversal signal. Do we want to take this? I'm not taking reversal signals because I just want to take continuity with you guys all the way. But if you're a reversal trader, these are great signals. They're not as accurate, but when they hit, they can hit for, who was it? Somebody was asked for looking for a high risk reward ratio. Who was it? M321. You're looking for a high risk reward ratio, my friend. These are the things that could go 1 to 3, although they're going to be maybe only 30-40% accurate. But when they flip, when you get the V-shaped recovery, they definitely give you a trade. Speaking of which, fuck me, I'm missing signals here, guys, because I'm not watching the charts. There is a signal here in gold, so we're going to take that. This is a super trend sell signal. The red means that the slope is negative. And again, I'm just going to move it, for a short target because I like to take my targets as a short target. It works. It does. If it's the bottom, it's the bottom. I'm not going to. If it stops me out, we'll recover on the next trade. We'll double up on the next trade and try to recover it. And sometimes it takes you 2 or 3 trades, to recover the full value of just this one big clip, which is fine. The whole idea is not to worry on a trade-to-trade basis where the P&L is, but just keep continuing to do this, winnow down the occasional losers, and just continue taking the winners. Focusing only on two instruments, which is NASDAQ and gold, really helps you keep your eye in the game and keep your mind clear. Okay. A little bit more selling pressure here on gold. A little bit more. 60. All right, I'll take the 50. Yeah, I don't care that it's not, that it's not to full target, because I'm just looking to, run my meter, my taxi meter, boom, 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 boom. Because I'm only taking my setups, because I'm not taking, but and of course, me, this is my weakness, by the way. And you're right. Who is it? M321. If they're like Sweetwater, probably would have taken $2 out of this trade. There are guys who trade much, much better at targets. That's fine. You got to know what your strength is. You got to know what your weakness is. You got to, you got to follow that path. I'm not in the business of fixing what is inherently going to be my personality issue. I don't change my personality. What I do is adapt my approach to how the structure works in the best possible way within my personality. So yes, Sweetwater, I'm sure, like Sweetwater, did you trade this trade, Sweetwater? I'm sure you must have taken $2 out of it. And I'm sure some other people in the room must have taken $2 out of it because this was a good clean signal. And I didn't. And I don't give a fuck, because I'll be taking 10 more trades down the road, and I'll make money my way. I think that's the other important part is what I've created is a beautiful, beautiful indicator that can be used by all sorts of people in all sorts of different ways in a very, very productive manner. How you make it productive is very much your own. The key thing that I want to show you is just the mindset and the structure, and then you guys can take it to town. John Riggins, thank you, John Riggins. Sweetwater says he did, and that is his personality. I know, because I know exactly. I know exactly how he trades. I know that he's got much greater sense of patience than I do. And that's, as a matter of fact, there's a lot of guys in the room who trade much better than I do, precisely because their personality is more optimal for these signals than mine. But again, going back to Lawrence Taylor. Lawrence Taylor was an amazing football player and pretty much a horrible human being from what I understand. And also, by the way, I think it was somebody said that he was I didn't know this, but he abused drugs a lot. Could have been, whatever. The point being is, not that I'm saying, you should abuse drugs or do whatever, but you should be you. The most important part of trading is to be you. You never want to be me in trading, because you always want to be true, but in the right mindset. Like, that's the whole idea. You don't want to be right. If your whole personality is to always be right, which I think in a lot of times, my personality was, once you understand that's not the way to win, it's very, very easy to go from always trying to be right to just trying to be in the right mindset. It's actually much easier than you think. And once you accept that, it's an incredible superpower as far as trading goes. So yeah, we got nice trends in gold, clearly developing. NAS is flopping all over the place. There was a couple of attempts at a buy, but we're not anywhere in super trend territory here. Only 19 basis. I'll take the dashboard away so it doesn't really bother us. But Tony, back to sort of explaining. The greens is positive slope, positive buy. The black is neutral or maybe negative slope, but positive, but buy signals. The reds is negative slope, negative buy, right? Meaning the strongest signal is the one that's colored. The more neutral signal is the one that's black. Does it mean that every color signal works and every black signal doesn't? No, absolutely not. It just means that there is a slight accuracy edge. So when you're sort of calculating on the greens, this is a continuity trade. This is not a continuity trade. This is a continuity trade. This is a continuity trade. This is a continuity. In this particular sample, you're talking about 4 out of 5, which is incredibly beneficial to us, right? That's an 80%. We only need a 50% kind of a hit rate, right? Whereas on the blacks, this may be a continuity trade. This isn't. This is not a continuity trade. So, and this is, no, I guess this is continuity trade because it kind of held. It just held the bottom. So this is like, 2 out of 3. Generally, and again, every stretch of chart is different. This is another thing, by the way, it's super interesting. There's a whole series of videos. I'll talk maybe tomorrow during non-farm payrolls. I'll turn you on to this guy. The guy has a really hokey little channel. A lot of the stuff he says is bullshit, but a couple of things. He's clearly a guy who used to be a trader and also who understands mathematics. He explains a couple of things so well. One of them, the function of randomness in price action, and how the reason why every single back test fails in the world is because you're taking only a single snapshot of the price action, whereas the possibility could be literally 100 different possibilities or 2,500 different possibilities off the exact same snapshot of price action, which is why just a tiny variation, like he gives this great example where he has a strategy. He starts the strategy at 1,700 hours New York, like sort of New York, close. And like, I don't know, it makes like 200% over 5 years. And then he takes the exact same strategy and starts it at 1701, right? All that is just 1 minute different. And the whole strategy is like negative. And it just the most dramatic example. And I guarantee you, like, you'll be doing a strategy where it's like 20 period SMA. It works great for like 5 years back. Now change it to like 18 period SMA, and boom, all of a sudden everything goes to shit. Just a tiny, it's the butterfly effect. Tiny change in parameters in complex systems will always make everything go awry. So you sort of have to, take everything with a grain of salt. Like the general idea is that yes, what I mean by that is like in this particular segment, if 4 out of 5 greens worked, but in another segment, maybe only 3 out of 3 greens work, But the idea is that over a large period of time, there is a distinct, maybe small, but a distinct edge in just taking the colored versus the blacks. But it doesn't mean that you, given the fact that we're fighting randomness by doing frequency. We're basically saying we're not going to be victim to just one trade, right? If we get stopped, we go back in with larger size to the next trade and to the next trade. We try to control our destiny by not being victim to just one trade and out, right? We assume that there is some degree of serial correlation to these trades, and that if one doesn't work out, the next one will, right? Now, even that fails occasionally, but even when that fails, it's all within the limits of our stop parameters, right? Because I don't go beyond. I really try to not go beyond 3 levels here, but if I have to, I'll go 4, and that's it. And if at 4, if I have to give up 3 days or 4 days worth of profits at 4, which is rare, then so be it. But once you get into that mindset of like, okay, fine, this particular run just did not. This particular run this week just didn't work. Fine. You can regroup and come back. That's the other beauty, by the way, of prop is what's the worst that happens to you? You blew up a single account. But if you do it, if you do it judiciously, like I'm suggesting, you're not going to blow up an account an hour. You may blow up an account, I don't know. Sweetwater, I'm actually curious. How many accounts do you blow up in a month these days? You're probably like a good metric for, I think, a good quality. And don't tell me you don't blow up any accounts. But just generally, give me an idea of what do you think? How many accounts do you think you blow up? My point being is, if you can go from blowing up an account a day to blowing up an account a week to blowing up an account a month, you are improving to an incredible degree, because you have 5 or 6 or 10 accounts with Apex. It's so cheap to buy a lot of these accounts. Just buy fucking 10 of them right now. Certainly yesterday would have been, you could have nailed a lot of them. You inventory them, and doing it this way, even if one account goes off the rails, you will nurse the other account to profit. And then you have like 5 or 6 funded accounts. It's the same model. Maybe 2 or 3 of those get paid out, and maybe 2 or 3 of those eventually get killed. Doesn't matter. Every funded account that gets paid out is a minimum of $2,500, right? So you've already won far in excess of where you've been. So yeah, Sweetwater says last month was 2, right? Okay, right. So yeah, but I mean, he's gotten to like when you're at a level where you're only blowing up 2 accounts a month, you are trading great. That's another thing that all the bullshit assholes on YouTube will not tell you. They're like, oh, I have 1,000. Look at me, I have 1,000 funded accounts, and I'm making $10 million a day. Fuck you. You're doing none of it. You're trading demo the whole time. Oh, we got a signal. Let's get funky. Damn it. Sorry, guys. I'm talking and I'm not watching the charts. See, I'm like right now. I'm not doing my best Lawrence Taylor. I'm pontificating when I should be trading. Let's see if I can P&L this one out. Come on, good. That was quickly done. The only thing I will say to redeem myself is you notice that I don't fuck around. I see the signal. I don't go Take it, leave it, bank it. Very much like that kind of mindset of just go out there, kill it, and if it kills you, you come back, you do it again. You can't. You either trade or you don't trade, but you don't hesitate. This was the reason, by the way, I got myself out so quickly is because I had a shitty entry. I knew I had a shitty. If I had an entry like this over here, this would have been a nice, clean $150 or maybe even $125 trade. Turned out to be a $75 trade. It's fine. I don't give a shit. Here's a secondary trade. Now I'm actually watching the trades, and I can preset myself on the entry. Oh, I know what I'll tell you. There's one other thing I want to tell you. Oh, we have a sell signal in gold here. Let's focus on gold for a second. So the other thing is, once you have a signal, you want to trade just one signal at a time, right? Fuck me. Okay, we got to go 2 of this. All right, because remember, I got myself stopped out. But did I not get myself? No, I did not get myself stopped out. Fuck, what am I talking about? 1. Sorry, I got myself confused. Because I was going to go too low. I'm on the wrong side. Fuck. All right, sell this. This is a tough trade because I feel like we sold the bottom here, but I don't give a shit. It's a signal. Let's take it. Even with two instruments, you will often be torn because, like, for example, this was a nice clean buy that I would have loved to have done. It would have been a much better buy than that sell in gold. I just simply committed myself to gold because I saw the signal over there and just went, okay, I'm just going to get out of this now. Shit, because I feel like I'm selling the bottom. It's fine. I'm getting out early. It doesn't matter. I'm up $500. For all my mistakes, I'm up $500 since 7 o'clock this morning. Do I give a shit that I fucked up? Zero fucks given. This would have been a really great trade. I really, really wanted this trade. I should have watched the thing. This would have been a $200 trade in about a minute. But that's the idea. The idea is $100, $200 per minute, 5-6 trades an hour, couple of hours. You're going to lose. You're not going to make $1,500 straight. You're going to give some back. In net, dust settles down. You're $800 to $900 up. That's very, very good. You do the same. And remember, this is a 150 account. Once this is funded, it's going to have a $5,000 pocket. So I'll be able to do the same thing on the. I'll be able to do 1,000, live on this account, same way as I do on the funded. Because there's not one of the things about the way I'm trading right now is I'm trading the exact same way I would be trading my live account. Now, and I know we've gone through this whole idea of like, oh, you should just take one trade, get it funded, and then trade carefully on the funded. While that sounds really good, and it's a lot of fun, and it's certainly a fun thing to do. I find, I don't know, I'm actually curious of people who do this. I find that if I use a huge amount of leverage to get myself there, I will inevitably blow up the funded account by using too much leverage. Like, you dance with a girl you came with. Like, in other words, the way you trade beforehand is probably going to be the way you trade in the funded stage. What do you guys think? Do you guys agree? Let me do some links here. Here's the link to our signals. Here's the link to Apex. Sweetwater says, got to trade the same with prop as with live. Everybody agrees on that. See, everybody in my room who's funded totally agrees with that. That's why you want to be, you want to be careful in terms of trading it this way. Those, by the way, those who like to trade reversals, here's a reversal signal in gold. Remember I said to you, this one fails, right? But maybe this one, if we're buying at 58, it's already at 62. That's already like a $3 move, but it could be like a $6-7 move. So you lose $1, you lose $1.50, but here you might be able to make $5. And if you got balls of steel, if you're like a serious risk taker, you do 1, 2, 4. And then at 4, at 4, not only you net positive P&L, but you are net positive P&L at the larger size. Like, that's an interesting strategy for a contra trend trader. But you got to just have balls of steel, because contra trend trading is very tough. Even though this is probably the single best contra trend signal you could possibly imagine, because it filters out a whole bunch of shit. And what you're hoping for is that V shape. You catch that V shape at large size, you're golden. You're totally golden. So if you want to trade that way, you absolutely can. It's just that the contra trend trades are few and far between. They're far more dangerous. And when I trade with you guys, I realized that what I want to do, almost everybody likes to trade continuity trades, and also there's just a lot more continuity trades throughout the morning than there are contrarian trades. So we'll trade those. What the fuck was I talking about? Oh, I was giving you guys signals. Oh, and you guys wanted the free indicators. Here's the trend indicator and the extreme indicator, which I don't have. Neither one of them I have on the screens right now, but feel free to download those indicators. Calvin, welcome from Sweden. Nice to see you. Okay, so this is what I wanted to show you. Okay, again, I'm probably going to miss signals, but this is worthwhile, because a lot of people in the room who are like, this is great, Boris, but I'm not fucking insane like you are, trading every 5 seconds. I want like a little bit better quality, more durable trades. So I actually went on the 5-minute chart. This is Scalper on the 5-minute chart. I want to show you something really cool, right? So here's the thing. Obviously, you're going to get far fewer signals, right? Far fewer signals. But let's just go from yesterday. As far as signals. Yes, this is, first of all, this is news at 9:30. You get a lot of flip back. But generally, we all know that from 10 o'clock onward, if there's a trend, that's when it's going to occur. So look at this 5-minute signal here. You're in at 66. It's a $50 point candle. It's a big candle, right? But you are trading like a swing, like on a swing trading basis. Even if you were trading this at like a 60% of target, you're in at 22. Your stop is going to be 72, right? So that's a 50-point stop. You're looking for a 30 to 40 point target. That takes 15 minutes, you're done, right? Same thing over here. You're in at 61. Your stop is going to be 21. You're looking for like a 30-point target, so like a 91 target, like right over here. You're done, right? So 2 winners. Oh, actually, I forgot. Here's another one, which is actually a smaller signal. So that one is good too. So now you have like 3 very nice long-term signals. Then you have this Asia session signals are by, I think, very definition going to be weak, but they're very small. They're like 10-point loss here, 10-point loss here, nothing big. Then you have a signal that comes up at European session. It's you're in at 12. The stop is going to be 92. It's a 20-point stop, but you're looking for, like, say, a 15-point target. So that's 727 right over here. Boom, 15-point target, done. And finally, you get this big ass 5-minute candle over here at 10 o'clock. That is 17 to 77. So that's a 50-point target, and you're really looking for a 40-point move here. So it's 17 to, what is that? 47, somewhere around there. It hasn't quite hit, but it's pretty much close. So can you basically wind up having, let's say, three signals on a 5-minute chart throughout the North American day. Each one of those with a potential for 20 to 40 points of target. That's a great way of trading if you don't want to trade every 5-10 minutes. So the people were asking me, does it work on longer term charts? Yes, it does work on a 5-minute chart, and it works pretty well. You can take a look at gold as well here. Look at gold on this is a 5-minute chart. 2 really good signals here. This is a 84 to that's a $6 move, and this one was a 80 to it's a $10 move. I mean, you're obviously not going to be making $5 or $10 moves, but the potential for much larger moves, really, really good. And gold actually is very, very good in the 5-minute chart because it's very noisy on the 1-minute chart, but a 5-minute chart really clips out those nice signals, right? Look at those nice clean signals in gold, both to the long side and to the short side. This long fails, but this long, even if this long fails, this long succeeds. So you stop here, you come back here. This long succeeds. It's a continuity signal. This long succeeds. This long fails. This long succeeds. So still very, very good structures, all the way through here. And I thought that was kind of interesting for those of you that want to trade a little bit more relaxed. NAS now goes to super trend territory. So super trend territory is when the candles get colored green. This is a extreme reversal signal, first of the kind. Usually this is not a good signal, but sometimes basically you're betting on the fact that we reach peak and it's going to reverse itself. Generally, I think there's some continuity here. As a matter of fact, we have a chance here to go long, which we will. Is this a 1 minute? Yeah, it's a 1-minute chart. I just want to make sure I'm on the 1-minute chart. If this thing holds, this is a super trend buy signal, and it's a positive buy signal with a green triangle, meaning the slope is positive. But we've got 27 seconds, so we have to wait until the signal completes. Sweetwater says that he's on a 5-minute chart. Yeah, 5-minute chart is if you're sort of like that kind of less clutter, I want to take a few measured but quality trades. That's a good thing to work with. Okay, I am going to go. Oh, I forgot to put the stop loss in here. Damn it. All right, I'm gonna do this. I'm gonna just get out. Fuck. Sorry, guys. All right, I butchered this trade. I have to get out of this trade because I forgot to put the stop loss, and then it's a real pain in the ass. Let me show you how you would do this if you ever have a problem. You have to go to trade, and you have to go to sell stop, and you gotta put the stop like somewhere around here, and then move it around with you. Talking and trading is an art that I'm still in the process of mastering. Sorry, I should have had the stop loss on here as a stop loss, but since I didn't want to have to go into creating a stop loss and measuring and all this stuff, I was like, fuck it, I'll get out of the trade. But this is a legit signal. Whether it works or not doesn't matter. We'll take it. We'll take the next one. Looks like it might die out actually. Let's see. The stop would be like around 829. Let's see if this this holds. Yep. Now, so the super trend signal gave up. So now it gets interesting. The question is was this peak valley? You know, this was this like the true reversal, or are we just going to consolidate, come back for the second wave? Markets are generally, you know, very, very quiet. It's not like there is a plethora of opinion on one side or the other. The thing that's pretty clear is that gold has had a clean, clear sell-off off the 2,900. A little bit probably looks like profit taking and stuff. But by the way, you know, we talked about the reversal signal, right? 1 miss, 2 miss, 3. The reversal signal now is 58 all the way up to 68. It's a 10-point reversal signal. So again, for those of you that want to trade this kind of like, hey, I take the reversal, I get stopped out. I take the reversal, I get stopped out. I take the reversal, I win big. It's a really, really good strategy, and it's completely legitimate. It could be a great strategy for a different account. You know, you could have just one account where you do nothing but trade reversals. These are also the cool thing about these signals is that they are far fewer and far between. Therefore, you know, you're not like a constant monkey jumping at every signal that there is. For example, this is the first reversal signal we've had all morning long in NASDAQ. It failed. If you were to follow the rules, you short here, the stop is at the high, somewhere around there. It failed at around the 45. So you would have to look for a second reversal signal to come in. But, you know, that's how the game would be played. It's low probability, but high reward when you hit it. Whereas when I'm doing continuity game, I'm really trying to trade high probability, lower reward. You know, it's always a trade-off one way or the other. Do I have any discounts to BK traders? Right now, I posted them, my friend, but here we go. Let me do it again. Here's a discount. And here's a discount to my coaching. Oh, hold on. Oh, why is this not working? Huh. Hang on just 1 second. Let me see why this is not working. I'm trying to put my coaching discount here. Oh, there it is. Okay. Sorry. Okay. Oh, signal. Okay, let's get along here. This one is with the strategy. Now, again, I took a black signal because I'm sort of being more promiscuous with my signals. I'm not really taking everything. And this is you can see it's a negative slope signal. Everything is selling off the highs. It's very much could be that NASDAQ has peaked and that this is, you know, it's not going to work, which it may not. But it's fine. I'll come back on the next trade and try to resolve it that way. I also have a sell signal here, which I want to do. Oh, shit. Did I miss? I did a double mistake. Sorry, guys. Okay, let me get out of this. Not a signal. This was not a signal. This signal disappeared on me. The other signal got stopped out. It's fine. We're going to resolve them both on the next move. So what time is it now? It's 10:24. Wow. Time really flew by today. Okay. Let's watch we're going to watch the gold signal. Let's see if the gold signal comes up, if this is going to be a sell signal here. I'll get myself prepared just in case it is. By the way, like a very good reason for why risk is paramount, right? What is the only thing you can control in the game is the risk. You see, I had the risk over here. Had I just fooled around with it, this would have been literally a 4 times loss than that I needed to be. So this was a tiny loss. It could have been a huge loss because it just dumped. That's why we use very organic losses or organic stops off of the charts. Because if you can't hold that signal, it's not, it could turn around viciously on you. All right, gold is rebuilding. Let's see if gold gives me a sell signal. And NAS is had its 10 o'clock rally and just kind of died. So that's it. And now I don't have any signals. All right, maybe we have a gold signal. Let's see. Nope. Now we're going into a little bit of a stall. We'll see what the European session closed at 11, so we'll see what flow comes in. Also, I realized why today is kind of quiet. We have non-farms tomorrow, so the markets are just kind of like treading water, which is really what we're doing at this point because everybody's looking for tomorrow's price action. All right, we're short here. Let's see if we get some continuity. So gold had a big sell-off, had a big counter trend rally, still in super trend territory, meaning that the width of the moving average is still pretty wide, suggesting it's still, the sellers still dominate the trade. But this is a strong counter trend rally in the super trend. We'll see if we get a little bit of a continuity to the downside. I took this is a black triangle, not a red triangle, so not a great signal, but a good signal. It works. It doesn't work. We'll come back at size on the next signal and resolve it. We'll see how it plays out. Prepositioning, yeah, it is a lot of prepositioning for the non-farm payrolls. So it might be kind of a quiet, churny little day for us. We'll see how it plays out. Don't forget, we're trading non-farm payrolls tomorrow. I'm probably going to join you a little bit late because I got to take my daughter to school. But Kay is going to run you through the through the opening trade, and she's going to trade FX. I'm pretty much not going to do anything until the New York Open, anyways. So I'll hang with you guys a little bit later. All right, guys, this is going to be a very, very slow trade. I'll let you know how it goes tomorrow. Remember, as I said, we could care less about this individual trade. If it works, it works. If it doesn't work, we will come back with size and try to resolve it on the next one and the next one. None of these trades are terminal to the position precisely because they're very, very controlled risk, right? Okay, I got to run because I got a meeting coming up in a few minutes. Everybody enjoy themselves. Let's see if we can get any kind of traction for the rest of the day. I'll see you guys tomorrow. Everybody have a great day. Bye-bye.